telling us a little bit about themselves. What does the process look like if you were to decide to work with them on their mortgage? Are there any unique benefits to working with this lender and their bank and their products? And what do you wish someone had told you before becoming a homeowner? So I'm going to pull these into the chat too, just to help you all remember what we were hoping to kind of talk about today. And first up, Craig is on dad duty and has a pickup or a drop off coming soon. So I'm going to let you go first, and then we'll pass it around.
Perfect. Well, I appreciate it. Thank you, everyone, for having me here. Once again, my name is Craig Greenberg. I'm with Land Home Financial. I personally have been in the mortgage industry for about 24 years now. I started out with Wells Fargo, was there for about 17 years, and started out originating loans and working in their home improvement space. So doing renovation types of loans and those types. In about 2017, Wells Fargo exited that program, which quite honestly worked well for me because around that same time, my wife was offered a position that took us down to the Houston, Texas area. So we moved to Houston for about 2 years. The whole family, including my in laws, went down there. We loved our time. Everything about it was fantastic. And then thought we'd be there about 5 or 6 years. Well, it turned out 2 years into it, her company said, just kidding, we need you back here in the Minneapolis area. So we moved right back. And I've been here in the western suburbs of Minneapolis back again since 2019. But I work remotely and I'm able to, our company is national. So I'm able to work and help people all throughout the country. One of the best things about that move down to Texas is that it got me into the community land trust space. I started out working with the Houston Community Land Trust, which since 2019 has been one of the faster growing CLTs throughout the country. We closed our first loan in 2019 in the June timeframe. And since then, the CLT itself has helped 200 families become homeowners. I think we've done probably about 140 of those homeowners. We've helped them get into their properties. And then since then, we've kind of evolved. My company, Land Home, has started out in 1988. We're based out of California, but we've been focusing on that affordable space really since our inception. And we started out doing manufactured housing in the California market, but we've evolved into doing all sorts of down payment assistance programs. We've expanded throughout the country. And CLT specific, I've helped out 7 different community land trusts throughout 5 different states. And that's been a real passion of ours because it really helps. It's amazing to see, what these types of programs mean to homeowners when a lot of folks, may have felt like that homeownership would never be something that they'd achieve. And these are great opportunities in order to make that happen. So my current role, I've been tasked with, I'm working with trying to expand our footprint in the community land trust space. So not only do I still do some originating, but I'm also talking with community land trusts and trying to get more of them on board because again, like I mentioned, it's a tremendous program. What does it look like working with Land Home? I've got a great team that works with me. It's myself, my coworker Bryson are the two that originate loans for us. So what we do is, that first conversation, we like to meet with our customers, explain how the CLT process works, make sure that they're aware of how the ground lease and everything else comes into play. We want to go over our programs with them. We work with both Fannie and Freddie. We've got great relationships with both of those investors. Even to the point where they'll sometimes reach on out to us to see how we can help out with community land trusts. So um, we go through all of the programs that are on out there, try to see if there's any sort of down payment assistance that might be able to work. In fact, we're actually one of the servicers for the Hoosier Homes program. And I've got my rep taking a look to see if we are, I believe it's the first step program as well that we offer. So we're just trying to make sure that there aren't any obstacles for the community land trust component of that to see if we can use those as well. But Bryson and I take our time. We go through how the program's going to work. We've got our processor. Her name is Andrea, works well with us, helps to gather up everything that's going to be necessary for the underwriter. And then we have a dedicated underwriter that is specific for our community land trust properties. And I brag about her all the time. I think she's absolutely fantastic. She knows, how the guidelines work and everything, but also, knows the real world scenarios as well, and wants to do whatever we can to help out, help that individual become a homeowner.
Hey,
But we,
Craig, can I stop
yeah,
you really quick?
yeah,
For those who maybe haven't gone through a mortgage process, some of these terms may not be as familiar. I know you're used to maybe
sure.
speaking them every day. So can I have you define a couple of things for us before you continue on?
Absolutely.
You're the lucky one, Craig, because the rest of you will just be able to continue, but Craig's in the hot seat here. So what does it mean to originate a loan?
So originating is like when we are starting that loan process. So we would be gathering information from a client, things like their income situation, who their employer is. We ask about their financial situations. We would pull a credit report and so forth. So when we go through and we gather all that information, we start off by doing what we call a pre-qualification. Um, that's when we're just kind of having a general conversation about their financial background. Then we can take that into more of a pre-approval where we're pulling a credit report and really looking at what those monthly payments are, what those obligations are, et cetera. And then officially to originate a loan, that's once we have our once we've evaluated the credit, but then also we want to, once the home is under contract. So when you've worked with the community land trust and you have a home picked out, we sign a contract. That's when everything officially becomes originated.
Okay. And what does it mean to be a loan servicer? You threw
So,
that out there too. So now you get to
yep.
define it. Watch out,
Yeah.
everyone. I'll call you out.
Yeah. So that's actually one of I'm going to kind of skip ahead here to our one of our unique benefits. What we've learned throughout this process, specifically working with community land trust, is that importance of servicing. So a lot of times, and what we used to do is we would help an individual get into a home. We would close on that loan with them. And then we worked with what's called a sub-servicer. So another company would come in and they would kind of manage the loan, if you will, post-closing. They'd take care of paying the taxes, the insurance. Individuals would make the payments directly to them. And what we found is that, especially with community land trust, because they do take a little bit of hand-holding post-closing, that just wasn't working for us. We were having far too many issues post closing or after closing, I should say. Because sometimes the taxes need to be changed because they're calculated differently for community land trusts and everything. So about a year ago, we went through and we worked with the two major investors on mortgages. That would be Fannie Mae and Freddie Mac. We have our servicing number, so now we keep everything in-house. So as part of this process, not only do you get to work with Bryson and myself as we start the process and help get you to the closing table, but we're also here afterwards. So if there are any hiccups, if there are any questions or whatnot, rather than me just handing off a toll-free number, people can reach out to me, and internally I can pick up the phone and call somebody and we can get an answer on things right away. So the servicer is the kind of the manager, if you will, of the loan after we get into closing and after you become a homeowner.
Okay, two more definitions and then you can continue on.
Sure.
You mentioned a processor and an underwriter. What does that mean in terms of mortgage loans?
Yep. So I would say our processor, that's an individual who is really there to gather the appropriate documentation for us. So, there are standard types of things that we have to gather up on every loan, things like pay stubs, bank statements, photo IDs, etc. But then as we have an underwriter, that's a person who's going to actually physically review the file. They're going to take a look at everything that you've submitted at that point, and they're going to look at the guidelines or the rules, if you will, that the investor has put on out there. And we have to make sure that that loan falls within the guidelines or the rules that the investor had put on out there. So the underwriter may say, hey, I know you've sent me your most recent 30 days of pay stubs, but I also want to see your last pay stub from 2023. And so they'll put requests out there that are called conditions. And then our processor will go out there and the processor will gather those conditions or the items that the underwriter has asked for.
Thank
Hopefully that
you
helps.
for helping with Mortgage 101. I
Sure.
appreciate that. If you can continue on, I appreciate it. Thank you, Craig.
Yeah, absolutely. And again, just what I love about this particular program is kind of going back to that servicing question is that my job is never done at the closing table, right? I have people that that reach on out to me, and we've been able to go to events with Community Land Trust, and they come on up to me, tell me how things are going in the house, or I should say on the property. Tell me about how their garden's working and so forth. And it's just a community land trust lending is just a magical program because again, it just you see how much it means to everybody. I think I touched on one of our biggest benefits there again is us being able to handle this and work with people post closing. We've got, like I mentioned, a couple of down payment assistance programs that we are already working with, the Hoosier Homes and the First Step, but also Fannie Mae and Freddie Mac, again, the two major investors, they have some other options as well, where depending on income limits, we may be able to help out with money towards some closing costs as well. Last thing in terms of, what do I wish that somebody had mentioned when becoming a homeowner? I would just say, quite honestly, enjoy it. It's a major accomplishment to get to that point, to get to the closing table. I know there are some times when, you're going through and it may seem a little bit overwhelming, like you're having to get too much in terms of documentation, and it seems like you might not get there, but we'll get there. All of the lenders on this call, I'm sure, are well rehearsed in the lending space, and everyone's goal is to get you to that closing table. Enjoy it when you get on in there. I know that there's it's easy in today's world of watching HGTV, getting into your home and wanting to do a million things right away. Just celebrate the accomplishment that you've just made and enjoy being a homeowner.
Thank you, Craig. I want to open it up to questions. And as those are coming in, if you could put in the chat the best way for people to contact you if they'd be interested in working with you and Land Home Financial, I'll make sure that that's what I have on my sheet. And I'll send a follow-up information, everyone on the call, with a collected contact information, which is what you should have already received an email, but I'll just double check that I've got everything correct. So any questions from anyone on the call before we let Craig go? And Craig, if you could go ahead and type your information
Yep,
in the chat,
we'll definitely do that.
that would be great. And then I'm going to kick it over to our Fifth Third friends, Jennifer and Jay Way. I'm not sure if you guys have kind of talked through how you might want to go about this, but I'll turn it over to you two.
Sure. Well, I will just introduce myself and then I'll turn it over to Jay, and I think she's going to handle it from there. But I'm Jennifer Miller. I'm the area sales manager for Fifth Third. I've been with Fifth Third. It will be 25 years in January, which is super hard to believe. But I got into mortgage just because I loved it. I was 19 years old as a teller, and I just wanted to know more and more and more. And our mortgage trainer was there at the branch, and she would give me Fannie and Freddie guidelines. I would take them home as a teenager and read through them because, I had no life. And again, just loved the mortgage space. But with the third, we've actually closed a community land trust actually in Bloomington, Indiana. And, we just kind of learned through. We haven't done near what Craig has done. We've only closed probably a handful since then. But we just opened up the community land trust when Fannie Freddie allowed their guidelines to allow for a community land trust. And so we worked through the very first one and we got it closed, and super excited. And we're very happy to work with Kepra. And Jayway, with that, I'm going to turn it over to you.
Thanks, Jennifer. And if you can't tell, Jennifer started at a very young age. So I'm not going to tell you how many years I've been in the business, but surprisingly, it's similar to Craig. So I worked at Wells Fargo for a total of 15 years here in the Indianapolis market. And I also worked actually in renovation financing. So what I found myself doing is a lot of the people that were looking to buy homes, they were in need of down payment assistance funds. So a lot of first-time home buyers, they've never bought a home before. They don't know the process. They don't know the steps. A lot of them are scared about what they need to do. So a lot of my appointments, I meet face-to-face. I found myself looking at what kind of programs are available to first-time home buyers. So it just naturally became what I moved into as far as helping people look for homes and look for financing, and sometimes in areas of need. So when the opportunity arose, I actually had an opportunity to find employment with Fifth Third Bank as an emerging markets MLO. So when it was offered, I graciously accepted. And so that's how I became in this role. As far as the process of what it looks like when someone decides to work with me, like I mentioned, I like to meet with my clients face to face. We have several locations around the city. I drive quite a bit too to meet with clients. So I like to meet with them first and foremost to see what kind of questions they may have. Sometimes they're not always readily available to meet. Sometimes they're not readily available to actually buy a home. A lot of times it's about what does their credit look like, or are they even ready yet? So the first appointment with them is not always to figure out, what can they afford? It's what is your situation? What is your time frame? It might be a year, it might even be 2 years out before they're ready to buy a home. So if they're not ready to purchase a home now, we work at a bank, so we have products to help them develop their credit, to get them ready to take the steps necessary so that in 6 months' time, 12 months time, or even 2 years time, they're ready to become a homeowner. So, whether it's a 6 month time period or if it's a longer process, it's just a relationship that grows over time to the point where they're finally ready to apply for a mortgage. And that's where they would apply, whether it's online, in person with me. There's different ways to go about that. Once they've closed on the home, Fifth Third retains all of our servicing as well. So that's nice in the fact that if someone had questions after closing, they can come into the office and sit with the banker, or even reach out to me too and ask questions about their mortgage. Like, Jayway, what happened to my mortgage payment? Why did it change? And since we have access to that information, that gives us the added benefit, if you will, to tell them what's changed. Generally, that's probably something that's out of control as far as property taxes or home insurance changing. But those are things that they can come to any really Fifth Third location and get those questions answered. I always joke with some of the clients too, especially when they're buying in the city that I live in, that I'm going to eventually see them at local grocery store or somewhere else. But every once in a while I see them, but not all the time. So I'm always curious as to see which of the clients that we help into homeownership who I'm going to see around the city. Some of the unique benefits that we have here at Fifth Third, we retain our servicing. We do have down payment assistance programs as well too that are specific to Fifth Third Bank. We can stack them along with the Indy CLT program, so that helps as well too. We can use public income housing as well too, assistance. So if someone's on public income, we can use that as far as the qualification process. The financing types that we offer are from single family homes as well as manufactured housing. So a variety of programs that we have. The two major investors that were mentioned previously with Freddie Mac and Fannie Mae, those are the biggest investors. We also follow their guidelines and products as well. We also offer manual underwriting. So what that means is when we take an application from someone that's looking to buy a home, if it doesn't quite exactly fit in the box because maybe there is no credit, for example, that's something that we can work with the clients. So those are just a couple of the things that we have that maybe distinguish us differently from others. As far as what do I wish someone had told me before becoming a homeowner, it's really just 2 words, and it's just breathe. When you're thinking about buying a home, there's so much to gather from your documentation you need to present as far as pay stubs, W-2s, doing home inspections, that you forget that you're a normal person, that you're allowed to just breathe and take a minute for yourself to really enjoy the process, right? Like just think about it, because at the end of the day, when you sign on the dotted line, you are a homeowner, right? And that's one of the fastest ways to generate wealth and generational wealth too, is to be a homeowner. So that's why I'm excited for us to be a part of this program.
Thank you. And Jennifer, what do you wish someone had told you before becoming a homeowner?
Oh my goodness, where would you even start, right? Like there needs to be that manual that I set it with on the floor at the end of the day. But really, I would just kind of echo Jayway and Craig. It's really just being excited and just breathing and kind of realizing what a special moment that is.
Thank you. And do we have any questions for Jayway or Jennifer today? Okay, not yet anyway. If you wouldn't mind putting your contact information into the chat, that would be fantastic. And I will now turn it over to Julie at PNC.
Hello, hi. I'm Julie Slayton with PNC Bank, and I have been in the industry for 33 years. I spent the first 11 years in consumer finance, and then the last 22 in mortgage specifically. I would say that, and I live in central Indiana and cover most of the central Indiana branches. I would say that the process with us, we've automated a lot. So, our pre-approvals are done online. We can meet face to face, but most people anymore are taking advantage of that technology piece. We do soft credit inquiries. And Stephanie, I know you're going to ask me what that terminology means. So, a soft credit inquiry means that you won't be able to see the inquiry on your credit report. It does not affect your credit score. And that's really important because before soft credit inquiries became a thing, people would do their due diligence and they would check with several different lenders. And if each lender was pulling a normal, it's called a hard credit inquiry, once you get more than a couple of those on your credit report, it can actually affect your credit score. And there are some lenders that still use hard credit inquiries. So I think that the fact that we use a soft credit inquiry to process the pre-approval is really smart for our borrowers that might be on the lower end of the credit score. One of the benefits of working with me specifically is because I did spend 10 years in almost 11 years in consumer finance, I am a credit expert. I can dissect a credit report, and it seems like we find more and more borrowers that are struggling with credit scores. I think most of us on this call know that consumer spending with credit cards is maybe at an all-time high, and you can pay your bills on time perfectly every month. But if you get your credit cards over 40 to 50% of the limit, going to drive those scores down, and people don't understand that. I hear all the time, my borrowers, even seasoned borrowers, that say, I don't understand why my credit scores under 700. I pay everything on time. And so counseling people and letting them know that it's not just a matter of paying everything on time. That's really important, but you also have to be able to manage your credit and not have too much exposure, not have those credit cards maxed out. I always tell my borrowers that if they don't qualify, we offer secured credit cards. A secured credit card is where you will put money into a savings account, and we issue a Visa with that to be able to help build more credit. Somebody mentioned before that, borrowers with very little or no credit, we do have a PNC community program that's zero down that will work with borrowers that have what we call alternative credit. So maybe they've been paying on a lease for the last 12 months and they pay it well. They've got a cell phone bill that they pay well. We can use those types of bills and build a credit file for them to be able to get them into a home. So again, just being a credit expert and knowing that most people that are coming in contact, whether they bought a home or not, even people that have bought homes in the past, things are different now. And so I always tell people, don't be afraid to ask questions. And I think that's what I would have wanted someone to tell me before I bought my first home is I think people are nervous and don't want to ask too many questions, or they don't want to feel like they're not intelligent. And that's not the case. You can be extremely intelligent, but if you don't do this for a living, you don't know what questions to ask. So I frequently get people to say, I have a silly question. And I'm like, no questions are silly questions. Ask everything. So that's what I would have wanted to know before buying my first home, is to ask as many questions as possible. As far as unique, I mentioned the PNC community. I did want to also mention that we have grants. PNC has decided we are also new to the Community Land Trust product, but we do have a very heavy grant. We're offering $7,500 on some homes in Indianapolis, the surrounding counties, to Marion County, to help people. And we've really just changed the parameters. We used to have a lot of strict guidelines on that grant to where it had to be first-time home buyers or you couldn't own another home. We've lifted all those restrictions. We really want to be one of the top low to moderate income lenders in the country. And so we're even allowing co-signers now with someone, but only using the borrower's qualifying income to see if they can qualify for the grant. So just doing some things a little different than we've done in the past to try to get that grant money out there as much as possible. And that's it.
Julie, and with the grant money, to confirm, grant money is something that is essentially given and doesn't have to be repaid. Would that be
That's right.
a good way to put
Yes.
that?
Yes.
And then for somebody who's never really looked at credit before, how would you describe it? How would you describe it? And then you kind of made some references to maybe like lower credit. How would you define that as well?
Okay, sure. So credit is when you borrow money, whether it is an auto loan, a student loan, a credit card, and then of course a mortgage. So that establishes what's called a trade line. When you borrow money from an institution and start paying it back every month, that institution sends a report card on you, if you will, and they send that to credit agencies that compile your credit report. You can monitor your own credit report on there's three major credit reporting agencies. There's Equifax, Experian, and TransUnion. You can go onto any of those websites at any time and check what your scores are. There's also companies like Credit Karma that a lot of people are used to hearing about. They give you 2 of the 3 scores, and they can do it for free as well. So, but that is what credit is. As far as scores, I know there are some brokers out there that can do FHA lending. FHA, there's a lot of or I don't know what the word I'm trying to say is. A lot of people think FHA stands for first time home buyer. FHA is the Federal Housing Administration. And so they have a product that they issue that has a 3.5% down payment. So a very minimal down payment. There are some brokers, maybe even on this call, that can do a 580 credit score. As far as I know, that is the absolute minimum credit score that can be used for FHA. PNC has to have a 600 credit score. In my personal opinion, if I were ranking credit scores, I would say if your credit score is a 600 to a 640, that is probably a C minus. 640 to 680 is probably a C. 680 to 720 is a B. Anything over 720 is A minus, and over 740 is an A. And you'll hear people say, oh, the credit scores could be 900. I can tell you in the 33 years in this industry, I've never seen a 900 credit score. In fact, the highest credit score I've ever seen is an 846. And I think it's one time. So if your credit score is above 700, that is a very good credit score, and above 740 is perfect. As far as mortgage lending goes, as far as a lot of the products that we offer, the interest rate will be determined by your credit score. It's also determined by the length of the time that you borrow the money. But so that's why it's important to know your credit score, to know how you can monitor your credit score. And then the last thing I will say, because things are different these days, credit cards are the most important thing when it comes to credit score anymore. Auto loans, student loans are good. You always want to pay everything on time, but credit cards have the most and the fastest impact on your credit score. So it's important to, what I mentioned earlier, not let your balance, the money that you're charging at the gas pump, at the grocery store, you'll know what your limit is. If your limit is $1,000, try to keep that balance no more than 300 to 400 to get the maximum points to build your credit score.
Thanks, Julie. I appreciate you taking us through that.
What
if one of our homeowners has not used credit? Like, what if they've paid cash? What does that mean for them potentially in being able to get a mortgage?
Yeah, and that is we run into that a lot. And one other thing too, if you stop using credit, so you mentioned paying cash, you get people who are fortunate enough to have their home paid for and they have a lot of money in the bank, and they just stop using credit. After 2 years of not using any credit, the credit agencies will stop scoring. So what we use that secured credit card that I mentioned to help either refresh a credit score if they've had credit in the past, but they've just stopped using credit. Once they get that secured credit card, a lot of times it will regenerate their credit, and some of those older, what we call trade lines, which is their debt that they've had, will then pop onto the credit report. But if they've just never had any credit because they're young or they just never had any, we use that secured credit card, and that can generate a credit score very quickly. Everything's real time these days, right? Because of the internet. So you can get a secured credit card and within 30 to 40 days have a credit score. But we also, I mentioned earlier, using rent payments, utility payments, so like cell phones. If you are in an apartment where you're paying a water bill, things like that, we can get payment histories through your checking account, and we can add those to a credit report, and it's called non-traditional credit. And so we can use that to help build a credit file.
Thank you, Julie.
Of course.
I want to pause if there's any specific questions for Julie, and if you want to put your contact information in the chat,
sure,
that would be great. And Kendra, you're going to be up next, if you don't mind. We'll just give a pause here for Julie, though. All right, Kendra, take it away, please.
Good evening, everybody, and congratulations to everybody who was able to join the call, because you are exploring what your options are in becoming a homeowner. So I definitely, just always want to start saying congratulations, because anybody who makes it to the point to talk to someone, to start asking about becoming a homeowner, you have probably had 50 or more conversations in your head, in the privacy of your home. You've probably had a lot of back and forth kind of conversations with yourself. So it's definitely a congratulations type of moment when you start putting things into action to bring you closer to being a homeowner. So I got off on my tangent, but as Stephanie said, my name is Kendra Irving. I'm with Stockyard Bank. I am a CRA mortgage loan officer. The difference between or one of the differences between a CRA mortgage loan officer and a traditional mortgage loan officer is the CRA mortgage loan officer primarily focuses on building those community partnerships, seeking out nonprofits and organizations to offer home ownership classes or financial education. And they have the ability to originate mortgage loans or help individuals obtain financing to become homeowners. So I've been in the financial industry for about 20 years. What brought me to the financial industry, whether it's mortgage or in the retail branch space, is just my love for finding out how finances change people's lives, how educating individuals about finances and about home ownership and the mortgage process. It really, like, you really see an impact as to how it positively impacts people's lives. So growing up, I wouldn't say that I didn't know anything about mortgage or anything about the financial industry, but I definitely did not know much. So my mother inherited her home. The home we grew up in was a home she inherited. So my mother and father had never actually went through the mortgage process. So later on in life, when my husband and I wanted to purchase a home, we really looked in the community and said, like, where do we go? Where do we go to find out how to buy a home? And we took a home buyer class. We took an all-day Saturday home buyer class, and it taught us. It tried to jam everything in about the home buyer process, and we left there just feeling empowered. And that's a feeling that this is, I don't know, maybe 15 years later or so. And I never forget that feeling, because just learning in that home buyer class sparked something in myself and my husband, and we're like, we can do this. Like, we can really do this. So my takeaway from that is to always approach any client that I'm in front of from an educating standpoint, to share my personal experiences and to hopefully make them feel super comfortable with not feeling like any question they may have is a silly question, but feeling like I'm really there to answer all your questions and to just make you feel more confident as you move through the home buyer process. So what the process would look like working with me, as some of the other lenders spoke about, things are changing. It is a lot more electronic, but you always have the option. I kind of go by whatever the client is comfortable with doing. Whatever, I meet the client where they are. So if they prefer to meet over the phone, or they prefer to meet in person at a branch, or they're comfortable doing things electronically, I do whatever kind of fits within their comfort level. I've even met customers at nonprofit agencies that they have a relationship with, so they feel comfortable there. And they may want me to come to that particular nonprofit agency to assist them. But you have the option of in person, electronic. Once we originally meet, it's just about me learning what your goals are, what you're trying to achieve. I really like to ask my clients, what is bringing you to starting your homeowner journey. And by me understanding a lot of kind of what brought them here and understanding what their goals are, it just helps me be more effective, and be more of a resource to them as we move through the process. I am typically working with you, not typically, I'm working with you from the beginning to the end. So from the start, our initial meeting, whether it's just, I meet with a lot of clients that are just gathering information. They just want to see if it's possible. From that process all the way till we make it to the closing table and everything is done with the loan and you are being handed your keys at the closing table, I am working with you throughout that process. Even though there are processors and there are underwriters that are involved in the process, I am holding your hand throughout the entire journey. Sometimes customers are not comfortable with a loan processor reaching out to them because they haven't built a relationship with that loan processor. And I always tell my customers, you tell me what works good for you. You tell me how you would like this process to run. And if my clients would prefer to deal with me throughout the process and not deal with the loan processor directly, that's something that I offer my clients to do that. And then after the mortgage process and after they've closed on the loan, the client always has my contact information. I always tell them to reach out if anything comes up after the mortgage process, with me working out in the community and with nonprofit agencies and different organizations. I come across a lot of different resources that are very important to homeowners. And even if it's not to do with the mortgage process, maybe you need repairs at your home, or just different things. And maybe I may not be able to, obviously make the decision for you, but I can point you in the right direction. I can maybe, give you a couple people to talk to, so that you feel like you're not on an island and, oh my goodness, I got through that process. And now I had a toilet stop up or something. What do I do? Type of thing. So I just try to let them know that I'll be a resource. I'll be a resource until you're tired of me. I'll be here. And then to talk about Stockyards, Stockyards has done some community land trust in different areas. They have not done one yet in the Indianapolis area, but is very excited. I'm very excited to see one come across. So from Kepra, and I just love the idea of the community land trust. From a product standpoint, um, Stockyards offers a lot of products for first-time home buyers, for individuals that may not have enough money for down payment, for individuals that has saved some money for down payment but didn't save enough for closing costs, maybe, or vice versa. We have our right at home program, which is a 0% down payment mortgage product that does not charge you mortgage insurance. One thing I wanted to say too with the credit scores. So I'm kind of going to answer the last question of what I wish someone had told me before I became a homeowner. And that would be, you do not have to be perfectly wrapped with a bow on top to become a homeowner. Whether your credit score is 620 or your credit score is 750, 800, there's a product out there for you. It's just about finding the product, finding the right thing that fits you. And if it may not be today, it may be in 3 months or 6 months down the road. But I think a lot of homeowners count themselves out because they just don't, they just look at their own situation through their own lens and the knowledge that they currently have, and they count themselves out. So I wish someone had told me that just start the process, just see, what's going on with it, instead of me staying as a renter for probably longer than I should have stayed as a renter before purchasing a home. So another product that we have is called Dream Home. And this is a brand new product that Stockyards rolled out last month. And one thing I love about Stockyards Bank is that they listen. They listen when we are saying, hey, this is what we're running into with customers. We need something for this particular customer. So the Dream Home product is a first and second mortgage that goes up to a combined loan to value of 103%. So what that means in general terms is that it allows you to finance what you would typically need for your down payment, to cover your down payment, and what you would typically need to have in cash in your bank account to also cover closing costs. So those are the two biggest things, aside from maybe bumps in your credit. Those are the two biggest things that really keep people out of becoming homeowners. Because as you're trying to save money, what's happening in the world today? Everything is increasing, from groceries to rent to gas. Everything is increasing. So although you're working diligently to save money and have enough money for closing costs and for down payment, sometimes you just need someone to offer some help. And that's what we think our Dream Home product does for customers, because it allows them to not have to have as much money, as much cash on hand to become a homeowner. And any unique benefits from working with me? I would say my most unique benefit, aside from the fact that I am super passionate about educating people about being homeowners, educating individuals about how home ownership builds generational wealth, and not just by saying it, but giving you examples of how that works. It may be something that people never thought about, and I just want to plant a seed into my customers when I work with them, so they don't just think I bought the house and I'm done. That may be, you know, what works into your goals, but maybe you don't think you can ever get into, you know, investing into real estate, or selling your first home and buying your second home. And I just, you know, like to share my story a lot with my clients, because I just know how much real estate has changed my life, my husband's life, and will change our kids' lives when they are older. And that's what it's all about. So I think I have covered all of the questions in my own order, but thank you to Kepra for letting me be a part of the lender panel, and I just look forward to working with you guys.
Thank you, Kendra. And I do have a follow-up question for you,
Yeah.
if you'll humor me. When you say products, like what does that mean when it comes to like mortgage products? Can you further define that?
Yes. So I think as far as mortgage products, everyone, all lenders that are probably on the call, they have access to the general mortgage products, your FHA that I think Julie talked about, and conventional mortgages. So there are a certain set of mortgage products that all lenders have access to. And then you also have each lender may or may not have special mortgage products that they have solely created that is offered only at their bank. So it's not something that other banks, my dream home product is not something that another bank could offer to their clients, but another bank could offer, for instance, an FHA mortgage, because we all have access to that product.
Thank you for explaining that so well.
You're
I
welcome.
appreciate, I learned something in that process, so thank you.
You're welcome.
A quick question for you or others. How many lenders would you suggest people talk to before they finally pull the trigger?
So I guess I'll start first since I'm already muted. Um, so my home ownership class that I attended over 15 years ago, they suggested you talk to 3 lenders. And that does not mean, to me, that doesn't mean that you're doing an application with all 3 lenders. It just means you're interviewing them because you are the prize. They want your business and they should have to work for your business. So you go in and you interview them, you talk to them about their products, what they have for you, and then you walk away and you kind of judge how that meeting went. Is that someone you want to go to step 2 with, or do you want to take them off the table? But I say 3 lenders is a good rule of thumb, but not running your credit 3 times is not what I suggest.
Thank you.
Any other questions for Kendra? All right. Well, if you'll put your contact information in the chat, that would be great. And now I'm going to turn it over to our friends Lynn and Andrew at National Bank of Indianapolis.
Okay, I'm not sure if Lynn is here, but I'm Andrew Engel with the National Bank of Indianapolis. And can you all hear me? Am I on? Okay.
Yeah, we can hear you. And Lynn is here too.
Okay, good deal. So anyway, I started in the mortgage industry, gosh, in 1999, kind of right after I left IU, and started working in a customer service position and taking phone calls about escrow analysis, and then ventured into post-closing, which was kind of a whole different area of dealing with loans after after you've signed all your paperwork and people are well into the home ownership arena, and dealing with clients after they've, bought their house. And then kind of started doing all that kind of piece. Moved into the National Bank of Indianapolis then in 2008, and did post-closing there, and then moved into a bunch of different roles, and then into the role now that I'm in, which is originating loans for first-time home buyers, which I started in late 2020, and I love it. It's challenging, so much fun, and it's great developing relationships. Our bank is local, and we are all about developing relationships with our clients, and I love it because I love to talk to people, and meeting new people is great, and it's just a really great way and of meeting people in the city. I grew up here in Indy. I went to North Central High School, and so I've been here basically my whole life, and don't intend on leaving anytime soon. So yeah, that's a little bit about me and how I got into the mortgage industry. It was kind of just a happen chance, I guess, that here I am. So if you would decide to work with us here at the National Bank of Indianapolis, the way that our bank works is we do everything. I would be your point of contact the entire way through the mortgage process. You would call the bank, and I would pick up the phone, and I would be like, "Hi, I'm Andy, Andrew, however you want to address me. I go by both." And I would start talking to you. We would have that initial conversation. A lot of clients do, as many of the mortgage lenders on the phone call have said. Some people do like to do that online, online application, online process. Others really like to talk like I do. So I'm more than happy to go out, meet people in person, talk, sit down, really really go over everything that you might have questions about. Some people are still, not all that jazzed about being in person and still like to talk, and we can do that on the phone. So all about doing that too. So we can do that anyway. We can get the process rolling. But I'm going to be the person, like you've heard the terms underwriter, processor. I'm the one that's doing all of that. I'm going to be the one that's looking at your credit report. I'm going to be the one looking at your pay stubs, your W-2s, and your bank statements, and asking you for all of that. I'm going to be that guy, that person that's going to be walking you through this whole thing. And then once we get to the closing table, I'll be sitting there with you. And once it's all like said and done, and you've got the keys to your house, we're going to keep your loan. We're going to service that loan for you. And if you have questions, after the fact, once you're in that house, and maybe something happens and you're like, oh my gosh, I've got this question about maybe a homeowner's insurance issue comes up, and you are like, I don't know what to do. You're going to give me a call, because I'm the person you've talked to the whole time. You've got my email, you've got my phone number. You give me a call, and I'm going to say, you know what, I'm going to hook you up with Janelle, who's around the corner from me. Your loan's with us. She's our insurance specialist. She sits 2 desks away from me. I'm going to hook you up with her, and she's going to help you out, because we are going to pay your taxes. We're going to pay your insurance. You're going to make your payment to us at any of our banking centers. You're going to mail it into us. However you want to do that. You can come in person, whatever feels comfortable for you. So that's kind of what does make our bank unique. We're local. We love to develop that relationship with you. And we do service our own loans that we make. All of them stay here with us.
Andrew, you talk about paying the insurance and the taxes. So if I get my mortgage through you, you're going to pay that for me?
Yeah, we're going to do all of that for you. So that we do. If you heard me say earlier, when I first got my first job in the mortgage field, I answered calls in a call center as a customer service rep, and I talked about escrow, and I answered all kinds of escrow analysis questions. And what an escrow account is, it's an account that your mortgage lender or your bank would hold for you. Part of your mortgage payment is called your escrow payment. That's the portion of your mortgage payment that is your homeowner's insurance and your property taxes. What we do is we take your homeowner's insurance premium amount and we divide that over the 12 months of the year. And each month, a portion of that payment goes into this account so that, let's say that you close on your home in July. Next year, when that homeowner's insurance bill comes due, we've got enough money in this account to pay for that bill. Same thing with your property taxes. In the state of Indiana, we pay those property taxes in May and also in November. So we're collecting the money to pay those bills every month so that you don't have to do that. We're going to make those payments for you.
So I'm still paying you the money to then pay the insurance company and the taxes.
Exactly. So
Okay.
you will get a copy of those bills in the mail, but you do not pay them. They're just simply for your records because you've already made that payment to your mortgage company, being us.
And is that like an option, or is that something that all mortgage companies do?
Well, with us, it is not an option. It's part of it's part of the loan requirement. So we do require an escrow account be established on our mortgage loans. I would say 9 times out of 10, most mortgage companies do require that. There could be lenders out there that don't require it, but it would just be something to definitely, like we were talking about, interviewing different lenders, 2 or 3 lenders, definitely. It's a question that you definitely might want to ask when you're talking to different lenders to interview. I would definitely maybe put that on my list of things that you want to think about. Hey, do you guys require an escrow account to be established when you're creating a new loan? Or I think that would be a good question to ask. The question about what would I wish that somebody had told me, wow, I would say there's a lot more to it than you realize. There are a lot of things that go into home ownership that than you realize, but it is so rewarding at the end. And once you get the keys to the house, it feels so great. And becoming a homeowner and being able to call a place your own, there's nothing like it. And being able to start that actual wealth building, that place to bring your family home to, and some place to call yours, and then also pass that along to your family, that generational wealth, that's really what it is. I just think that's the most rewarding thing to think about. But it's so much, it's a lot to take on, but it is worth it. I really do think it's worth it.
Thank you, Andrew. Lynn, were you able to come back and join us?
Yes, I'm here. I was actually just leaving my office. I was still sitting at my desk at work and headed out, and I'm finally headed home. So from downtown to the north side, here I go.
Oh boy.
We're based here in Indianapolis. Our bank started in 1993. We're here. We're local. We're here to help. We see mortgage as a service, and I love everything that everybody said so far. Everybody that's going through this program is just in great hands.
Thank you, Lynn. Is there anything that you wish someone had told you before becoming a homeowner?
This is a long process. It can be a long process, but getting everything in order, owning that property, knowing that that's yours, that is so important and so worthwhile. So everything is going to be harder than you think it is, and it's all worth it.
Thank you, Lynn. And Andy, if you could put both you and Lynn's contact information in the chat, since I know she's actively driving, that would be amazing. But if not, I think I have. I know I don't have your number, Andrew, so.
Can I, Ellen, to you
Yeah.
by chance tomorrow? Because I'm not sure how to do it from my phone.
Oh, yeah,
This
yeah.
is the first time I've ever done a Zoom from my phone. I apologize. I don't.
No worries at all. We're
So,
good. Okay, and then last but certainly not least, Becca.
Myself off mute. So the first question was who I am. Before I do that, though, kudos to Kepra, our partners at Kepra, for bringing this CLT home. I know a lot of work in the city of Indianapolis has entrusted you guys to bring this product to bear in our community. So thank you for your work on it. A little about me. I am a person that grew up on the Near East side of Indianapolis. I now live on the southeast corner of the county. So born and raised here in Indy. I became a mortgage banker in 1986. And I came in as a processor, the person that puts the puzzle together for the underwriter who makes the loan decision. So I worked with borrowers to get their loan ready. I became the community reinvestment loan officer in 1988, and that began my career since that day of being a community lender and an affordable housing lender. And so I've done that since 1988. What is that? 36 years, I guess. And I have done everything from underwriting to training to business development. At one point, I was the vice president of affordable lending for the state of Indiana. I then spent time with a local nonprofit, INHP, and I've worked with them twice. So I am once again the vice president of affordable lending for Merchants Bank. So that's been my career for all those years, and I enjoy it very much. I don't think I'll retire until I have to, because it's just such a privilege to be involved with projects and products and people and groups. So that's kind of who I am. I'm a mother of two, grandmother to two, and that's who I am. So as far as kind of process, how we handle the process of taking applications and working with borrowers, not much different than what you've heard already. It's not like each lender reinvents the process. It kind of is what it is. It's get pre-qualified, work with a realtor to find a house, get a home inspection, get processed, get underwritten, get closed, and then service. So it's kind of the same process you have to go through. And like Lynn said, it is a slog. It is a long process. You're always being asked to do something else, get something else, explain something else. And that doesn't change much because, again, the products and the process are kind of the same. But as you've heard each lender talk about, and one of the questions Stephanie asked us is how kind of are we different? You know, what do we do that may differentiate us one from each other? And there's not a whole lot that is, honestly, because I know Jay-Way, I know Andrew, I know Kendra, I know these people, and we all, Dottie, we've been doing this a long time. We all care about the community. Most of us are working locally. So these are relationships that we have and things that we do. I think for merchants, I know we have an entire team that works on affordable housing and projects and products and serving the community. I think that's different for us, the dedication and the relationships that we can bring to bear for you. I know that our two loan officers both can do a lot of product modeling for you, a lot of credit simulator, and give you specific goals and steps to get yourself ready if you're not. We don't just tell you, nope, you're not going to work. It's not going to work out for you. But we do a lot of hand holding, modeling for you on what products look like, which one is best, how you fit into that, why you don't fit into this, specifics on what you need to do to become ready, and then check-ins on how you're doing with that. So you're going to leave, if not now, with here's what to do and when, come back with these things done, and your credit score will look like. Or if you do this, that's going to resolve this issue that's haunting you, or that you have, or that you need to work on. So it's not going to be something where we just say no and you're off on your own. Good luck. So I think that dedication and hand holding until we can get you ready is maybe a differentiator for us. Although I know these people are good. These loan officers that have talked already are good. I don't know Greg at all, but the rest of them, I know you guys. I know that they're going to do the right things for you and with you. So, yeah. So I do think one thing that sets us apart from most of the people that have talked, other than Andrew, we are one of two lenders that can offer you down payment assistance through the Federal Home Loan Bank of Indiana. And so that does set us apart a lot. We have just finished Home Boost, which is a minority-based down payment assistance program through that Federal Home Loan Bank. We have 25 people we've helped so far to get that $25,000 grant, have 2 more pending. So hopefully our number will be 27 homeowners we've helped with that. We did even more with the HOP program that came out in May. So we have cyclical down payment assistance that we can offer. We do offer the, Greg mentioned they were trying to sign up for the Indiana housing, which has down payment assistance, but it's not a grant, but we do that, and it does make sense for borrowers. And I think that sets us apart because we do understand the ins and outs of those things, and we'll discuss with you why this works better, why this is available, maybe not the better option, but this is why, because we're so familiar and so experienced with all those products and resources. Merchants does have our own down payment assistance as well. It's $8,000, and it is a forgivable grant. Unlike the Indiana housing down payment assistance, which is a repayable assistance program. So I think those are the big differentiators. We're pretty good at, we know what's out there. We know what works, what doesn't, and we're going to help explain that to you. Also with J-Way, and I know J-Way is, we are also members of CIRA, which is the Central Indiana Realtors Association, and we are members of their loan council, lender council. So we rely on each other. We will put out, if we have a borrower that we're working with and we can't quite get you what you need, we're going to talk with that council and talk with those lenders that we are partners with, honestly, and say, J-Way, can you get this done? And she's going to chime in and say no. And somebody else is going to chime in and say yes. Or J-Way's like, I can do that. So we do have that lender council that we work very closely with and understand who each other are and what our products are. And so we're going to tap into that for you as well. So I think that's the big differentiators for us. We also will refer you to nonprofit groups, like we know which nonprofit groups we have relationships with who are developing housing, who have home repair resources. So we bring a lot to the table with that. Did I miss anything, Stephanie, other than the last question, which is my personal? So I bought my first house in 1989. I was a processor. I'd been a mortgage banker for a minute, so I kind of thought I knew everything. With years more experience, I think the main thing I would tell a new home buyer is somebody mentioned, and I forget who it was, but the asking of questions. I think it was you, Kendra. Don't be afraid to ask questions. You are the one, we're working for you. So your realtor and your loan officer are your team. Okay, they are the ones that are striving throughout the process, no matter how it looks to you. They are striving to get you to the closing table. You know, a lot happens behind the scenes that you're not aware of. And when they're saying, hey, I need a letter of explanation on why you have this Zelle deposit in your bank account, and you're like, for the love of Mike, that's so ridiculous. But they're doing that because the underwriter or processor is like, we can't do this, we need this. So recognizing that that team of your realtor and your loan officer are always working behind the scenes to get you to the closing table is important. So they're working for you. Ask the question, why do you need this? This seems silly to me. Explain it to me. Or why did you put me in this program when you're up front? What are your lender fees? Compare those lender fees when you're talking. I recommend 3 as well. When you're talking to the other 2 lenders, what are your lender fees? Why do you think this is a program for me? Do you have down payment assistance? Or is this a fixed rate? Those are the kinds of questions that you want to ask when you're talking to them, because the lender fees are what the lender controls. The rest of the costs are either industry driven or property driven. So get down to what their fees are, because that's what you're comparing when it comes to closing costs. The other thing I would say, and I didn't realize when I bought a house, it was about, you know, I want to raise a family. I'm married now, and I want to have a home and, you know, all the feel goods. But as you're doing the slog of getting through this process, and as you're getting all these documents and keeping on, providing stuff and having questions, and you're like, geez, Louise, is this even worth it? Here's what I want you to know. Home ownership is the #1 way that you can build wealth. Even though you'll be in this community land trust where you're sharing some of the appreciation, that appreciation you are gaining. You are gaining that, you're paying principal down, you're getting equity. And that is the #1 way we build wealth. And that is why you are doing it also. It's the feel goods, and it's also the money and that passing that generational wealth on, which the Community Land Trust does allow you to do. That is all from me.
Thank you, Becca.
You
Any
bet.
questions for Becca? So feel free to come off mute. And I saw you already put your contact information in. Thank you.
Good luck, home buyers. You can do it.
And I just want to say to those who are here, and I know we have several that are going to catch this as a recording, when I put this ask out, you know, to give a part of your evening, and all of you saying yes without hesitation and making it happen in a pretty short time frame, I really do appreciate you. Collectively hearing you all talk was actually really rewarding for me. I'm just like, wow, we've got some really amazing people in our community who are trying to work well and be good partners with us. And so I'm just really grateful to have all of you spending some of your time with us, and know that regardless of what product or what kind of, you know, everybody's got a different connection with somebody else, and there's nothing that's right or wrong about that. That's just part of the process. I feel like anyone I would be happy to work with any of you, and I'm just really grateful for your time tonight. So, Alvin, any last remarks before we hop off?
I'll just ditto that. And again, like we're gonna put this recording out there, so please agree with the advice, talk to at least 3 people and choose what's best for you. Because again, that's what we're all here for, is trying to find the best fit for you and finding affordable housing. So, and again, even with the community land trust, if you're able to talk to these lenders and get pre-approved, and there's some situation where you can buy a house and move forward outside of the community land trust, we're also great with that too. So for us, we can help you with the CLT, great. If one of these lenders can help you find a home that works for you too, well, that's also great. So again, thank you for your time tonight. And we'll make sure to send this out to all the folks who are interested in buying with the CLT so they can catch the recording and you with your contact info too.
Thank you all. Have a great night.
Good night.
Thanks, everybody.